learned from the lesson. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Fear how I feel, then you feel it's a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down.
All right, ladies and gentlemen, I got your watch list coming in on March 14, 2022, and we need to talk about the rate hike, the Russian default that is on the table, and then we got to talk about China as well as everything that is going to happen this week. It is going to be a crazy one. I have a lot of different things to share for you, and if you didn't check out the video that we posted yesterday, we did an interview with Tukrium CEO. If you're trading wheat, corn, soybeans, any of that, you're probably going to want to watch it, but with everything we got going on, commodities is going to be a big focus this week, and then on top of that, Powell and everything else, but that is actually not the main thing I want to show you. So I was going to get into this later, but I think we should start the video with this. Again, you have Powell this week. They are expected to raise rates, and this is going to be a big thing that people are looking for. So just to start with the pretty pictures here, what happens after the Fed raises rates? Well, as you could see on average, over the last like 20 or 30 years, on average, the next 3 months is 50% positive, so that's a coin flip. The next 6 months is 75% positive, and then 12 months after every rate hike, it is always up. So if you want to go back to the last time we did this in 2015, the next 3 months the market was down, then next 6 months it was a small gain, then it went to 9.1. If you go to the 80s, it actually wasn't that bad when you first see what happens, and then if you go to 1999, a year after there was a real Russian default or Soviet Union, there you can see it was negative the first 3 months, and then everything bounced. So why this is important, because we're going to get a lot of talks here with the rate hikes. A lot of people keep bringing this up, so make sure you watch it. But now let's go to the next one. As far as industry, this chart is showing you which industries perform the best. Surprisingly, tech is number one, and I say surprising because you remember everybody was freaking out, wait, higher rates, tech, all of that. So here's this list. You can see that, and then we're going to go to two more here, but now the next one, and this is what makes it a little bit tricky. Usually when you have oil prices going high, that's when they actually start cutting rates. So this is the first time that we've had oil this high with the rates pretty much this low. So this is going to be one of the headwinds people are bringing up. And then on top of it now, as you start looking at the rate hikes, a lot of people are saying, well, how are we going to play out for the next 3, 6, 12 months? A lot of people are bringing up the midterm cycle. And what they usually see is that the second quarter is usually negative, and then you get a end of the year rush that is probably the biggest. So we're going to see how this plays out, but I want you to keep this all in mind because this week, the rate hike, the Fed, and all of the drama, it is going to be very important. So let's get right into it. If you find the video helpful, drop your thumbs up on the video. And if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/the stock market. We will see you there in the morning. And if you don't know, we have a random comment generator. So we do this every Monday. What we ask on this watch list is that you post a random option trade, strike price, expiration date, all of that. Tomorrow morning before the bell, we're going to pick one, and then we'll see the performance, and it's not too bad, Chad. But right off the bat, like we said, it is going to be about Powell this week. He is most likely going to be hawkish. Yes, everybody knows he is going to raise rates, but now everything he says besides that, those parts will be very important because now we are going to get guidance. We're going to get economic projections. People are going to be talking about the dot plot, and then we are also going to hear about balance sheet reduction. So we need to watch out for that. But this is one of the bigger signals that I'm looking for. If the market prices even lower after his speech on Wednesday or even before, I honestly think that's where the market is going to be going. So if you don't know, this is the Fed futures, and this is the chart that I'm talking about leading. This was actually dropping and led the way down before any of the volatility this year, and it's showing you how the market is pricing in the rate hikes. And essentially, before after the Fed, if this starts going lower, it will hit a new point, and I think if it breaks a big range, this will be our leading indicator. So that is my opinion, but on top of it, we are going to have Powell this week, so I am sure we are going to find some things out about it. But that is the big thing I'm going to be watching. The next thing, like we said, a Russian default. People are calling this crunch time now. It's been a couple of weeks. A lot of their reserves are still tied up, and they're having that issue with paying in rubles versus not. We even had a statement over the weekend from from IMF head Georgieva. She said it is no longer improbable, but now a lot of people are talking about this because the question is, what are the effects? Who is it going to affect? But last time this happened, it was 1998, and that was the collapse of the Soviet Union. So keep that one in mind. That is a big thing we're going to be looking at. And then for the rest of the week, I would not be surprised to see a lot of headlines regarding China and Russian and those relations. They are going to be in focus. We are having that one talk with Chinese officials this week, but then Russia also asked China for help over the weekend. So I'm sure we're going to see this, not to mention the drama with China last week at some of the companies. That is definitely going to come up this week. And then watch out here for the morning. There was talks about document signing for peace agreements. So I wouldn't be surprised to see this come out and be one of those big factors. So definitely watch out for that. And then coming into your final pretty picture, this is my opinion, but I think you can see it here with the chart. It is showing you the price of margin now for any futures, or specifically in this case oil. And what you could see ever since the end of February, it has gone up almost 50% in terms of margin cost to trade any of these. And that's where I'm thinking here, after we get the Fed, after we get any of these developments, where we go from here. If things keep going, I just think prices are going up. Essentially, after this week, this may be one of those last stop moments, and then we start seeing everything get more expensive, whether it's trading, spreads, volatility. So keep that in mind, but that is going to be a big deal. As far as everything else, we are going to get a lot of economic data. You will be getting PPI and U.S. home sales, but for the most part, it's going to be all about Russia, China, and then Big Daddy Powell. We will see what happens. But coming into the company news and events, this is a big one. I actually have a bunch of China news to start with here, but China, they may cut their key rate for the second time this year on Tuesday, so that would indicate a slowdown, and we've been getting a lot of headlines with this over the last couple weeks. So remember, anytime they do this, this will be key. Definitely keep your eye out for any of those developments. And then the United States, they said they will be meeting with China for the first time since this Russia stuff happened, and they are going to talk about limiting Russia. But then a couple hours after we got that, there was another report saying that Russia has reached out to China and is asking them for weapons. So pretty interesting. We may even have to go over this tomorrow. These are like a visual flow of like trade flows and all of that. Again, like actual, exports and imports. So them in China is a big deal. You can see it there kind of with the pretty diagram, but this will be key. And that's why I'm saying where we go from here, it will be very important. And then on top of it, all of the headlines we got last week, that is something we are going to have to watch for. I'm going to get to it in a second, but there was that. And then this one is sad, and it may mark a turning point, but an American journalist and filmmaker, Brent Renaud, he was killed while covering the Ukraine crisis. So there's a couple stories on this, but for now, I believe this is the first American death. So we'll see how this comes into the weekend. But there was that, and then this one was kind of interesting. I kind of LOL'd a little bit, but the White House and Psaki, they had a briefing at the end of last week with 30 TikTok stars to discuss U.S. policy on Ukraine in an effort to counter Russian propaganda. So that's what they're doing. That's what they're doing. But there was that, and then over the weekend, you probably heard about this. A lot of people went back and forth, but Iran, they have fired a missile at northern Iraq, and they have suspended any talks with the Saudi Arabians, and this comes days after the Iran deal has stalled. So remember, we were talking about it last week. We were getting a lot of those rumors here and there. Well, those talks have stalled. It does not look like we are going to get that Iran nuclear deal, and it's not going to help out oil, and then they got kind of mad there. So there was that, and then I already shared this one with you, but it is very important, again, the implications and where we go from here. But IMF head Georgina, she said that the Russian default is no longer an improbable event, but she did say the bank's exposure is, quote, definitely not systemically relevant at this moment. So they're not really too worried about it, so we'll see what it brings about. But again, you haven't seen a modern default of a big country in a while. I think there was like Greece and a couple of other ones, but this situation is a little bit more unique, so we will see what happens. And then this is the business news from last week. We got a little bit of an update over the weekend. We will see what happens as we move forward, but Beijing and Washington, they said that they should be able to strike a deal on the dispute over China firms and audits. If you're not familiar, what happened last week, it was one thing for the China stocks to get clapped. They had their MPC event, the National Party Convention. They've been doing a lot of stimulus and all of this stuff, but then those older headlines on China stocks having to comply with U.S. stuff, well, it kind of hit a turning point, and a couple of companies didn't comply, and it started leading people to really freak out. So we're going to see what happens. They may have an answer here, but this could affect a lot of the China names on the U.S. stock market, and we definitely saw this in the last 2 days of the week last week, so watch out for that. And then finally, Uber said that they are adding a fuel surcharge to help with the higher gas prices so their drivers don't get completely wrecked. So not too bad there. There was a couple of more things, but again, everything this week, it is all going to be about Powell. It is all about the headlines, and then everything going on with China, whether they do a rate hike or if they get clapped on U.S. markets. It is a very interesting X factor, so I'm pretty sure it's going to be a crazy week, but that is pretty much it. So let us get into the plays. So right off the bat, I got 3 or 4 different plays that I'm looking at coming into tomorrow. We did make a couple of plays on Friday that I'll go over, but if you did not watch that interview, again, we just posted it yesterday. You might want to check it out. I do have one play related to it, but the first one, it's going to be the fertilizer plays. A couple people were asking me about these, and listen, there is a lot of other ones. These are the 2 right now that are kind of getting a lot of hype. I did make a play on NTR. We will go over it, but right now, I'm liking the fertilizer plays. We talked about it last week. The premiums are in that weird middle. I'll show you when I get to the play, but I definitely want to keep my eyes on these. I think they will be big, but it all depends now if we see the commodities go crazy. We've already spent 1 week where it chilled out, and really, that is going to be the question this week, but NTR, Mosaic, MOS, a lot of people are playing them. They are already moving. They've already held up great, so these are what I'm going to be looking for. As far as the play, I decided to go with a May 130 call on NTR. I only bought one, and I spent $1.60. They went up throughout the day, but this is what I mean with the premiums kind of in the middle. Literally at 160, you're like up 100%, but then these were also going for the higher too, so you got a decent risk reward, but this is why I got time with it. I will be looking at these, but at the end of the day, I did keep it small. Again, if you didn't watch the interview, a lot of these things are going to move pretty much month by month or quarter by quarter. I'm going to talk about it on the next play, but that's what I'm going to be keeping in mind. But I think over the next few months, you're going to watch these go back and forth, but do not forget about them. We will be able to play these a couple of times, so watch out for that. That is the first play, and shout out if you posted the fertilizer plays, and if you have any more, feel free. But the second one, corn and soybean. Corn and soybean are both ETFs. Literally, they are 2 Korean funds, so it's just like wheat, but now corn and soybeans, I'm keeping in mind the cosmic cycle. It's not a financial cycle, but the cosmic cycle, how the world works with planting and harvesting, southern hemisphere, northern hemisphere. Again, watch the interview. It was very, very informative, but this is what I'm going to be keeping in mind, and if you got to listen to it, I think you realize how important corn and soybeans are, so going to be keeping a watch on these. I don't know if I am going to add to a position. I'm assuming that all of the premiums are still going to be like the wheat ones. Like you could see here with soybeans, they went up like 100%. Again, our wheat plays are still up 500%, and that's because wheat doesn't really move as much. Again, the volatility that we got with wheat, even though a lot of everything else went up, wheat was very unique. But I'm going to be watching corn. I'm going to be watching soybeans. We'll see how it plays out. But again, we're going to have the rate hike and all of this other stuff. The real question is now, do we still see that commodity craze come back? And if we do, it's going to be one thing to watch here. But now also don't forget, give it a couple more months here. As we start getting that data, we are definitely going to find out what's going on. But those are the 2 plays. Watch out for those. And then Domino's, DPZ. I mean, I'm just going to say it right here. If you saw the interview, you know what's up about it. But I'm going to be watching this one. They've already dropped there coming into the day. If you go look at their chart, I think you'll be a little bit fascinated, especially if you watch the interview. But going to be watching some of these pizza plays. I think it'll be pretty interesting. And then finally, Amazon. I made a play on this one on Friday. The logic is I've been seeing people buying on the split, but now we're getting a lot of this volatility. So I'm thinking that if things do escalate, they may get hit a little bit. So it's kind of a YOLO play, but I thought I would do it, get a decent amount of time, and then we'll ride it out. The play is far out the money, so just remember, this is all about the volatility here, but you can see these puts were going for a lot, and then that split news in the run-up, it really clapped them. So I grabbed an April 1960 put. I only grabbed one of them, and I spent about like 310 or 305, so slight gain there, but I grabbed this one right at close, and I think that was pretty much it. But I'm focusing on the Fed. We are going to talk about financials here too. Don't forget about those before a Fed meeting, but now we're watching the commodity plays. We're watching what happens here and where we go from here. Like I'm saying, depending on how it plays out, whether it escalates or kind of does what it did last week, we're going to really find find out, are prices, inflation pressures, all of that, are they really about to start going from here? So watch out for all those. As far as any other plays, I did make one more play on XPO Logistics, and I grabbed a May like 95 or 90 call at like 130. I grabbed two of them. I think they were here right here on the 95, and the reason was they had a lot of good guidance there. I think they're involved with any of the shipping and all of that, and just after their earnings, there was a lot of analysts talking about how they've split up from another company, and it's creating some profitability. So they had momentum. I thought it'd be a good one, but they did go down there. I bought them for like 130, so I lost like 20 or 30%. So we will see what happens, but those are the only other plays. As far as everything else, like we said, corn, soybeans, all of that, those ALGM, I still have these, and these are some of those chip plays. Again, if we do get more escalation, I think they're going to come back to life. They're actually still holding up pretty good. I even have the NVIDIAs. Those were shorter term. They're down a little bit, but they are holding up. But again, we will be keeping our eye out for any chip news. Amazon, like we said, Domino's in the pizza companies, and then NTR, and then financials, XLF and JPM. And sadly, JP Morgan was implicated as a counterparty risk there to that nickel short, or the billionaire guy who's down like 12 billion. So we'll see how it plays out. But again, coming into the first rate hike here, I would definitely be watching the bank stocks. Do not forget about them. I am going to be watching Alcoa and XOM still. We want to see how they hold up and if they're able to do their thing. But again, they've had some pretty big run-ups, and that's why when I'm saying, when you look at certain other ones like corn and all of them, they've held up a little bit more stable, or you could tell whether it's just been a slight run up or if they've had like crazy volatility. Again, I think you could see it in the wheat one where this one just went vertical or not. So keep that in mind with some of these plays, because again, it's doing that back and forth. You even saw it with LMT and all of those. And then JD and Baba, remember, all of this China stuff is pretty big right now, and a lot of people aren't talking about it considering with what we got here. So it's either things are going to flush really bad, but if they do make an agreement, this might start to be a good buying opportunity, or at the very least be able to trade it there for the upside. So watch out for that. And then finally, like we said, man, TLT, I want to bring up the dollar. I know the dollar has been going crazy, and if it does skyrocket past there, I think it's just as important, because you see something happening. It is literally TLT and the dollar both at their breakout range. This is a 100-day chart. Even if we pull it up on the 1 year, you can notice they are both breaking out. So realistically, TLT coming down from here, I mean, I think you could see it. It looks just like the Fed futures chart, and like I keep bringing up, this is going to be the most important factor. So this is really what I'm looking for. If this breaks just like any of the other TLT or the longer term bonds, I think it's going to show us something. And now the real question is, if the Fed futures really start running down, bonds start running down, and the market doesn't react, that may very well be a snitch. What I'm trying to tell you, if the divergence widens from here and the market doesn't catch up with it, and that divergence gets wider, I think it'll be very hard for the market to ignore, and the S&P is going to have to chase the bonds. So I hope you're ready. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. I need you to remember, baby, it's not that simple, but you still got it. But the code loves you. I love you. I'm going to see you in the morning. Let's go.